What's up everybody, Jaspreet Singh here, and now with the cryptocurrency prices rising, everybody's wondering if the crypto crash is over because now technically Bitcoin is in a bull market. Bull market meaning an upwards growth market, because the technical definition of a bull market is when you are up 20% off of your lows. And I know this year, 2022, we're not looking at a lot of technical definitions because although we technically might be in a recession, we aren't actually in a recession. So although Bitcoin technically is in a bull market, it might not actually be in a bull market. All jokes aside, this is where a lot of people are wondering, what is actually happening in the crypto market? Is this crypto crash over? Well, on one hand, you have entities, institutions like Charles Schwab, which is one of the largest and most well-known money management, money transacting institutions on Wall Street, who is now launching a cryptocurrency-based ETF because they want to give institutions and wealthy individuals access to more cryptocurrency investments. So what this ETF is an exchange traded fund, and it has a lot of different cryptocurrency investments related to the ETF. So it is a way for now, if you're an institution on Wall Street, if you're a money manager, you have a lot of money and you want to invest in crypto, but you can't or don't want to actually own crypto, this ETF is an alternative for that. It gives you indirect exposure to cryptocurrency. Now, this is much more volatile, but it gives kind of good news to the cryptocurrency market because it shows that you have people who have money, institutions, wealthy investors who want exposure to cryptocurrency. Now, I don't recommend, if you want to own crypto, for you to invest in the ETF. I say just actually go out and own the crypto. Don't buy a derivative. You'll get the actual thing instead of owning something that gives you exposure to the thing that you want to own. So own the actual crypto. But this is where people are wondering, is this crypto crash over? And the reality is no. It's not over. The pain for cryptocurrency is not done yet, and there are two different layers or levels of pain in the cryptocurrency market that you need to understand. One is at the exchange level, the cryptocurrency exchange level. The second is at the blockchain level, the actual cryptocurrencies themselves. Let me talk about the exchange level because this might be a little bit easier to understand. We've already been seeing this in action. We've seen cryptocurrency firms like Celsius, Voyager, Gemini, BlockFi. Many of these firms have laid people off. Some of them have frozen funds, meaning if you had money in one of these firms, they might have locked you out. Not all of them did, but some of them have locked you out because they didn't have the money to give you your money back, and so they needed your money. And some of these firms have even filed for bankruptcy. Like Celsius is currently in bankruptcy, and so in these situations, it's very tough for you to get any of your money back. Actually, just a couple days ago, Crypto.com laid off about 260 employees in a layoff that they had scheduled. But after that, they continued to lay people off somewhere in the hundreds. We don't have a clear answer, but they had to lay these people off because their costs were so high that they couldn't support all these employees. So what does this tell us? Well, these exchanges are tech companies. They are a byproduct or a partial byproduct of the money printing and the boom economy we have seen over the last couple of years. And that was fueled by extremely low interest rates and easy access to cash because the Federal Reserve Bank and the government were printing and spending money like crazy. And so these tech companies, which were the crypto exchanges, were able to raise money at extremely high valuations. And then when crypto prices started to fall, people pulled their money out of crypto, and these exchanges started losing money and they weren't able to get more cash. So they needed to cut their costs quickly, AKA fire people. And some of them were forced to go bankrupt or steal your money, essentially. So the rule here is if you want to invest in cryptocurrency, that's fine. Don't keep your money in an exchange. I don't care which exchange you're using. It does not matter. An exchange is supposed to be an exchange, meaning a place where you can buy and sell crypto. It's not a wallet. A wallet is separate than an exchange. A wallet is where you keep your cryptocurrency, where you store it, where it's safe. An exchange is where you buy and sell crypto, because if your crypto is in an exchange, it is in danger no matter which cryptocurrency exchange you're using. So take your crypto out of your exchange and keep it in a wallet. That way your crypto is protected. Now, if you're looking for a good exchange to use, you can check out our sponsor FTX US. I like FTX because one, they make trading and buying and investing in crypto extremely simple. Two, they make dollar cost average investing in crypto extremely easy. Like if you want to buy Bitcoin every day or every week or every month, all you have to do is click a couple buttons and it's completely set up. Like I buy Bitcoin, Ethereum, and a couple other coins every day, and it's super easy to do with something like FTX US. And third, the best part is that their fees are so much lower than pretty much every other major brokerage out there. So more of your money is going to actually buy you crypto or whatever assets you want instead of just making your brokerage richer. Now, FTX US has just launched a feature where not only can you trade cryptos and NFTs, but now you can also buy stocks right off of the platform. So if you want to invest your money in the markets, FTX US makes it super easy for you to do that. And if you use my link down in the description below, and then you enter in the referral code minority, FTX US will also give you some free cryptocurrency after you trade $100 worth of crypto on their app. So all you gotta do is use my link down in the description and then enter in the referral code minority. Now, on the second layer of potential pain for the cryptocurrency market, it is the actual blockchains. And the reason why this is another layer of pain is because, well, of the whole economic environment that we're in. If a cryptocurrency blockchain goes bust or it gets hit very hard, people get scared, they panic, and then they think that all of cryptocurrency is going to zero. Cryptocurrency is one of those asset classes because, for one, it's very new, it's still very volatile, where price plays a major impact as to people's beliefs about the asset class. Like real estate, we can understand has value because you can live in a home. No matter what the price is, you know that you can live in a home. With a stock investment, you know that Amazon, if you invest in the Amazon company, is selling products. Amazon is doing something. So even if the price of Amazon falls, you know what Amazon does. With crypto, it's a little bit different because people don't really understand what the blockchain does. Many people are just hoping to get rich quick without actually understanding what the blockchain does. And then on top of that, we also have regulations which make cryptocurrency more volatile and a little bit more risky. For example, the Coinbase team came out just recently and they were talking about how if they were forced to by the government, they would completely halt all Ethereum staking. So what does that mean? It means that if you are investing your money in cryptocurrency, well, for one, you need to know what you're investing in. What does the blockchain do? What is it for? And second, you have to understand the risks, because one risk is, of course, the exchange risk, that an exchange goes under or something happens to an exchange, which is why you want to keep a cryptocurrency out of your exchange. The second risk then is, how good is your blockchain? How usable is it? How big is the network? Because originally, when cryptocurrency started becoming popular years ago, the whole idea was it's a way to replace the dollar. It's a way to move away from the dollar, which is manipulated by the government and the Federal Reserve Bank, because the dollar is not backed by any asset. There's no limit to how much dollars you can produce. So that's where cryptocurrency can provide some value. But then cryptocurrency continued to evolve. And now, in addition to just being some sort of property or something that you can transact with, it's also becoming more of a software. This is what the blockchain can do, because a blockchain gives you the ability to build things like smart contracts. It allows you to build things on top of that technology, which provides a lot of value to people and businesses. So that's the value of the blockchain, but not every cryptocurrency will succeed. Some of them will fail. What's going to contribute to some failing or not? Well, one, the actual use, but then second is investment in those cryptocurrencies and blockchains, because now we're going through this economic cycle where money is being pulled out of the economy, right? We have a whole lot of inflation. The Federal Reserve Bank is working to cool inflation down. How are they doing that? By raising interest rates. When you raise interest rates, now this makes borrowing money more expensive, and that means that if you invest your money, you're going to need a better return to justify your investment. So now an investor is saying, okay, it is more expensive to borrow, it's more expensive for me to do these things, so I need to get better returns on my investments, so I can't make as many risky investments. And so speculative investments get hurt the most when you have a interest rising environment like the one that we're in right now. And guess what? Blockchain cryptocurrency is a very speculative investment because it's such a new asset class. So guess who's getting hit? Well, cryptocurrency. Well, cryptocurrency was also a byproduct of the bubble, because now when you see the opposite happen, when interest rates got cut and money printing was rapid, like it was rampant, it was happening everywhere, Guess which asset class saw the biggest growth in 2020? Cryptocurrency. The stock market grew by around 60% from the bottom of 2020 until the top of 2020, towards the end of 2020. Cryptocurrency grew by about 600% over that same period. Why? Because it's speculative. When people had that money, when interest rates were low, people were putting their money into speculative investments, things like cryptocurrency, and the buyers then made a ton of money. So when you're in that type of environment, the loose money environment, the speculative investments win the most. When you're in a money tightening environment, the speculative investments get hit the most. And so this is where you have to understand, if you are an investor in cryptocurrency, you shouldn't be worried about these day-to-day swings. The reason why you're investing is because you believe in the blockchain, you believe in the long-term value, you believe in the actual use case of the cryptocurrency and the technology, and that's why you want to own it for the long term. The short-term swings are just noise. Those are the things that you want to stay away from. Now, does this mean you're guaranteed to make money? No, absolutely not. Investing has risks. You're never guaranteed to make money, which is why you never want to blindly listen to a random guy on YouTube. But this is where you also want to understand what is your goal with investing, because cryptocurrency is very different than the other investment classes, and you want to make sure that if you're investing in crypto, you know what you're investing in and you know your investment goals, because if you're investing for the long term, you got to ignore the short-term noise. If you enjoyed this video and you want to see why we might be entering a once-in-a-lifetime opportunity to build wealth and what you can do to capitalize on it, I already made a video covering it, and you can watch it by clicking that button right over there. Thank you for watching, and as always, keep hustling. When the 2020 pandemic happened, that was when the stock market and cryptocurrency was the biggest opportunity. Next time,